Everyone knows the headliners: NVIDIA, GPUs that do the heavy lifting, AMD, CPUs and accelerators, and cloud giants like Amazon and Microsoft who buy racks by the truckload and whisper, "Scale," in every meeting. These are the bands that get all the fan art. But every stadium tour needs production crews, the people who build the stage, hang the lights, and make sure the amps don't burst into flames. Enter Supermicro Computer. They're the backstage team that takes the hottest chips and assembles them into deployable systems, server racks, liquid-cooled enclosures, desk-side supercomputers, and edge boxes, complete with power distribution, thermal engineering, and networking. In other words, they don't make the guitars, but they build the arena and wire the PA. When demand for AI compute skyrockets, Supermicro's order board looks like VIP tickets on opening night. When demand cools, they're the ones stuck holding extra seats. The headline that set off the fund managers group chat. In December, shares of Supermicro Computer sank 13.5%, a raw, punishing slide that made portfolio managers do a double take and Reddit traders drop popcorn everywhere. That plunge wasn't random panic, it was a reaction to mounting doubts about the pace and durability of AI infrastructure spending. When the band pays less for stagehands, the stagehands lose shifts, and the market is brutally efficient at punishing those gaps. Why did investors suddenly turn from cheerleaders into skeptics? Because three ugly words started showing up in headlines: delivery delays, margin compression, and customer concentration. The top line and the squeeze, what the last quarter actually looked like. Let's put real numbers on the table, because drama without math is just theater. On November 4th, Supermicro reported Q1 fiscal 2026 revenue of about $5.02 billion, down from $5.9 billion a year earlier. Gross profit dropped to roughly $467 million, for a gross margin near 9%, a meaningful compression from last year's 13% margin. Those are not trivial changes. Every percentage point of margin is cash that pays salaries, research, and the factory lights. When margins fall, the company's cushion gets thinner and investor patience shortens. But wait, there's a yell of optimism in the mix. Management expects Q2 net sales between $10 billion and $11 billion, implying revenue could double quarter over quarter if those bookings become recognized revenue. That's a blockbuster ramp if it actually lands. Management and the street are playing a high-stakes game of prove it. Can the company turn backlog into recognized sales on schedule, or will integration snags and last-minute customer changes push revenue into the next quarter? The short answer: it depends on whether the chips show up, customers accept the systems, and complex racks pass exhaustive testing. By the way, if you are benefiting from the content so far and want more like this, like the video, it means much to me, or hit the subscribe button and comment the word more. Just go ahead and type the word more so I know. Now that you have commented, let's continue. Supermicro builds the arena for NVIDIA's fireworks, and that's both a blessing and a risk. Supermicro's close collaboration with NVIDIA is their raison d'etre in the AI age. The company ships full-stack, liquid-cooled systems built to NVIDIA's reference designs, systems that let cloud builders cram more Blackwell GPUs into a rack while keeping power and heat manageable. That's the dream: higher GPU density, lower power per flop, and faster scaling of AI factories. The customer value prop is real: lower operating costs, higher model throughput, and fewer "we need another rack" headaches. But here's the rub: that intimacy with NVIDIA creates customer concentration risk. If the market tilts away from that specific GPU generation, or if NVIDIA's own commercial arrangements change, Supermicro's revenue mix could shift dramatically. Imagine being the only company that builds stadium stages compatible with a certain band's tour. If the band changes its production design or postpones the tour, you're left with unsold aluminum and board riggers. Supermicro is the custom stage builder whose blueprints match NVIDIA's latest setlist. If NVIDIA performs a surprise acoustic tour, the loud, liquid-cooled stages don't sell as fast. The margin squeeze, why 9% gross margin is a red flashing light. Gross margin is the heartbeat of any hardware business. Supermicro's recent 9% gross margin is its lowest in a while, and that matters because the company is fundamentally a thin-margin systems assembler. When you sell commodity hardware with tight markup, you rely on volume, repeat orders, and efficiency to create attractive free cash flow. Lower margins could come from several places: higher component costs, memory, networking, pricing pressure from big customers who demand discounts, or higher integration and testing costs for new, complex racks. The net effect is the same: less cash per sale. For a company that needs capital to scale production and manage supply chains, that's not great. Picture selling $100 burgers but paying $92 for ingredients and staff. You can sell 1,000,000 burgers, but your restaurant is fragile to price swings. The backlog is real. Supermicro reported huge orders and design wins in excess of billions, especially for NVIDIA Blackwell-based systems. That backlog is the reason management dares to forecast FY revenue targets as high as $33 to $36 billion. But remember, order books are promises, not recognized sales. The revenue only lands when the systems are delivered and accepted. Complex GPU racks often require last-minute configuration changes, additional testing, and co-engineering with customers, and those delays move revenue between quarters. That's what happened when approximately $1.5 billion in revenue was deferred, and the market punished the stock for the timing miss. The street wants to see recognition, not promises. The difference between "we have orders" and "we recognized revenue" is what fills the company's bank account. The CoreWeave cautionary tale: sector tremors can rattle Supermicro. Sector risk is real. CoreWeave, a cloud provider tightly linked to NVIDIA's GPU ecosystem, had a dramatic market wobble late in 2025, convertible debt raises, execution snags, and plunging stock prices. That episode lit a fuse under investors' fear of an AI infrastructure oversupply or a leveraged cloud provider imploding, which would cascade into reduced orders for system integrators like Supermicro. If multiple neoclouds face funding or debt trouble at once, the market could be flooded with used GPUs or face demand death by 1,000 pauses. That's not hypothetical, it's the scenario headlines were screaming about in December. Imagine a used guitar market so flooded that stage builders can't sell new sound systems. Suddenly you have racks with nowhere to go. Note this as well. Do you want peace at heart? The next day John seeth Jesus coming unto him, and saith, Behold the Lamb of God, which taketh away the sin of the world. John 1:29. Fear God, and give glory to him, for the hour of his judgment is come, and worship him that made heaven, and earth, and the sea, and the fountains of waters. Revelation 14 verse 7. I appeal to you to fear God and obey his law. For his commandments are sure and his word everlasting. Do not be afraid, do not be discouraged. Want more information? Please check the description section. That's the end for now. If you have watched until the end, drop a comment like this: I stayed until the end. Just comment that I stayed until the end. When I see this comment, I will give you a heart. 3 more favors I request from you. First, like this video, subscribe and then turn on the notifications bell. If you do this, you greatly encourage me to continue bringing to you insightful information. Do not miss out on our future videos full of insight. All I am asking is your subscription. Thanks for joining us today. Your support means so much to us. Do not hesitate to share this video to help someone who may benefit. I recommend that you watch the next video, subscribe to the channel and share your thoughts about today's video. Wish you God's blessings and care. Wait, watch and pray. See you in the next video according to God's will.